In this video, I am going to show you exactly what I am currently looking for on the Bitcoin chart as we are tuning into our inflation data and our interest rate decision later on today. Allow me to demonstrate you with a video on what has happened over the past few days, what is the environment currently, and why we should be careful treading along. Hope you thoroughly enjoyed this technical analysis, and let's just get started straight off the bat. Over the last few days, we have simply been really choppy price action, right? We have been, after we had a massive increase in price, we got rejected, put in a low, initial rejection at the time being, long staking profits at the time. Then we had a really small retracement, right, called a dead cat bounce based off of that 382 Fibonacci level over here, right, giving us that resistance, and boom, dropping all the way down to the bottom of a larger range, which I'm going to touch upon in a second. Since then, what we have done is we have really chopped around in a very narrow and tight range, after crawling up for a little bit, we have been crawling out of that, and then we have seen some volatility, after which we had a rejection. During this time, gave us a really good trading opportunity in the community, where I literally traded that and also walked through every single step of not only the trade setup, but also the emotional thought process that went along with it. Because I am going to be honest, and I'm going to say this on video, at the time when I was trading this particular setup, I was not fully confident that we were actually going to drop. And that is the reason why I want to highlight this, because in the end, I keep on saying in other videos as well, that if you have a plan, make the plan and make sure you stick with it. Do not let your emotions get in the way. And this is one of the occasions where I was not 100% fully confident in my own setup. Yet, I made the plan and I stuck to it, and in the end, profited from it. So gave that setup and walked my way through it, right, with afterwards summarizing it a little bit for the people who were not present at the time, but at the time being, you know, coaching the way through it and how I was thinking at the moment in time, confirming the fact that this increase in price coming off of a really classic short squeeze with a decrease in open interest, just chopping up where the volume was coming from people leaving the market rather than from entering the market. And where did we ultimately stop that increase? Well, surprise, surprise, the level that Bitcoin likes to respect the most. If we pull a Fibonacci from the top to the bottom, we have our 618 level, and that is ultimately where we got rejected off of, trading it nicely down for more or less 2% profit on the trade. So while price action has been choppy and very slow, sluggish over the last week, there are trades to be had. However, it is a little bit more tricky to actually trade it, I would say, as price is more sluggish and tends to be more choppy. And the same goes what happened from there on onwards. At the moment, we are simply just sloping upwards, right? Sloping upwards. However, if we have the knowledge and the tools, then we can use it to frame the current price action, which is this local channel, where we can see that upwards crawling price action, very well respected channel where we initiate this as an initial starting point, right? Making our rotation up, has a midline really well respected. This is not the point when the channel is actually established, but then, you know, having a massive deviation to the upside, and there we go, having our second top, confirming our trend line, and then ultimately lining that up on a slightly higher time frame on the candle closes, giving us that top of the channel that we are currently still in, and remaining very well respected, with the bottom well respected, the midline most importantly respected, and that top line also more or less respected, especially on the higher time frames. And that is the current situation that we are in. Now, I would not necessarily say that this is very convincing, strong price action in the sense of an uptrend. And this is the point where you have to realize the current dynamics of the market. Yes, it is true. While you have a plan, you can simply execute it. So if your plan, for example, was to look for that rejection off of that 618, very well done. I'm pretty sure I'm not the only one, because in the group we have been trading this and we have been making profits. That was really nice. And now we are coming up once again to that 618 level. But not gonna lie, that if you have to zoom out, you have to find yourself a technical reason as to why is price action so sluggish. And this is also a danger that you can have if you zoom in too much on the time frame, on the lower time frames. If you are a day trader, this is one of these things that you need to watch out for. And that is really what I want the focus of this video to be. When you are having sluggish price action, there is usually a technical reason for it. That reason doesn't always have to be found in the local lower time frame places, because if you simply zoom out, then you cannot forget that overall we are in a range bound environment where we have been putting in a high and a low and never have really surpassed it, really. So with that, we can form ourselves our channel where we have our bigger key levels coming in at that 31,500 level and that 29,500 level as ultimate support before we would see a higher time frame progression of the chart. And until then, we simply remain totally and utterly range bound. And if you could see, like if you use this framework and just observe where we are now with the current price action, you can see that we are literally just trading in that middle section of the entire range. And therefore, we can come to the conclusion that ultimately we are here in the middle of a range. And that is the reason why it does make sense that we are trading rather on low volume. We have some choppy price action going here along, and that is one of the reasons why I would say we are having this type of price action. So the whole conclusion and purpose of this video is to make you aware of the environment that you're trading in and that you can adapt to the market situations. Now, if you are more interested to learn about how can you trade in low liquidity environments, then check this video that is going to be recommended at the end of this video. And then I have, I guess, a last little announcement, which is that in the community, it has been going really well. I'm very happy with it. The demand is really high though, so the member cap is going to be reached very soon. But I do want to make a quick announcement that I have decided to build a beginner technical analysis course that will come including the membership, so that you can follow along with all the charts that are being posted and get going on it as well. So just wanted to get that out there. And that for now is the video on how I'm looking for Bitcoin. Final conclusion, I would say ultimate resistance point is $31,500. An important key level to the downside, we have $29,500. Be aware that this can get volatile as we are trading in the middle of the range, coming into our interest rate decisions, etc. So be aware with that. Hopefully you are a little bit prepared of what is going to come next. Currently simply trading in the middle of the range. Like I said before, if you are interested on how to trade low liquidity environments, simply check this video over here. And have a great day and see you in the next video. Cheers, everyone.